Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, July the 21st, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30 minutes, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview. Once again, wave 1 is done, working on wave 2 down. Is this the beginning of a breakout and we go on to new highs, or is this just another fizzle manizzle and we actually go lower low? Big view is this pink box. As long as we're below it, we still have pressure to go lower low. Once we're above the pink box, pretty much could say that that's over, and we're going to stair step in a multi-year move toward that 120, 130 target. If it gets real feisty, maybe that 140 target, but minimum target 120 up here, likely target 130, kind of the sweet spot, and aggressive target would be the 140. So the plan is to go breaking out. Whenever this baby is done, we are going to go breaking out. I'm not convinced at this point that this is definitely done and we're ready to do it. We get above this pink box, then it's over, in my humble opinion, and we'll stair step, multi-year stair step toward that 120 to 140 zone. Again, sweet spot being 130. But what if we keep going lower low? At some point, the wave 2, whether it's down here where we originally had talked about looking for a deeper retracement, or is this the end, somewhere between where we are in this 80 down here, we should reverse and absolutely go breaking out. So, looking at the charting platform, we're just kind of chopping in this trend channel. So far, so good. We have been making lower highs, lower lows, lower highs, lower lows. Is this going to continue that trend? Make another lower high end here, and then another lower low, and this just keeps chopping, grinding, grunting, laboring decline. We're still looking for what we've been discussing for the last week or so. We're looking for a candle body close below this 100.5. That's been a battle zone that we've tested for a long time, and we've been below it for over a year until recently we finally broke above it and we retested it. So, Mr. Tucson, is that the end of this and we're ready to go breaking out? Possibly. It is possible, but it's still not a real high probability. So if we turn back down and we actually close below this 100.5, then it kind of sets the tone. What do we mean by close by? Not just a little wick. We want to see the candle body of this daily candle close below that 100.5. Then it sets the tone. We're going to go visit the magic Fibbo / the 618 retracement zone. So which one are we going to get? Do we go breaking out to go on to new highs, or do we fizzle and turn back down? This overlapping chopping action still doesn't convince me that this is the end and we're ready to go breaking out. In order for us to take the breakout seriously, we got to close above the pink box, which we're testing now and starting to reject a little bit from. So we have to break outside of the trend channel, close above this pink box, and then right above that pink box is another pink box from the prior move that it could not break out of. And this is the next pink box from the second move. So from this high to this low, this top pink box is the 618786 zone. From this recent high to this low, the lower pink box is the 618786 zone. So you can kind of put them all together and say this whole area between where we are up to about 101.50 is going to be extremely strong resistance, because we tested the zone, failed, we tested the zone, failed, and even as we broke out, we talked about that for weeks in advance, that we closed above the 618, so we're likely to go visit the 1448, 1272 area, which we did. Then once we hit that, we said typically when now we got a weekly overbought and a daily overbought on the software, we're likely going to see a pullback. Well, is this the end? A little 3-wave down and that's the end? Maybe. It's possible. We did come back to the area in which we broke out from. That's what I was talking about. We haven't broken above this for like over a year. We kind of tested a little bit here, failed, retested, stayed below, test, below, test, below. And most recently, when we finally broke this, now we retested it. We talked about that, but the least we're going to do would be retest this thing. We finally got it, right? We came close. We rallied to another lower high. We did get the test. And is this over and we go breaking out? Well, the true telltale sign is going to be if we can break this high around that 101.80 area. That would be the retracement, retest the breakout, former battle zone, which was resistance, turn support. So if we go breaking out, make a new high, then it sets the tone. We're going to start pushing. We close above 102 up here. Then it sets the tone. We're going to push toward that 104, 105 area, which is the beginning of that big pink box. So this is not clear sailing by any stretch that we're definitely going breaking out. And it's not clear sailing that we're definitely going to go breaking down. But as long as we stay in this resistance zone, the likelihood is we're probably going to go lower low. Is this the low we needed, the retest of that battle zone? Let's just see. So there are ways to break this down into small little incremental bites. So we have a low, we have a high, and if this thing starts turning back down, so just run you 2.2 here, you have that low, you have this high, and you'll see why we have so many lines on here. If we start closing back below that 150, which is this battle zone, then it sets the tone we're going lower low. So here's some high probability outcomes. James, Emil, Ian, we break back below the support zone. It sets the tone we're going to visit the magic Fibbo. If this thing breaks out above this box, even though it's not the new high, but if we break above that, it sets the tone we're going higher high. So there's a lot of real estate to get through. And we kind of expected this bounce after the low test. We expected that little bit of a bounce, but I suspect it's over and look for us to go lower low, right? That's kind of the plan. So if you took this bounce, be in a position of authority, because this does not just scream we're ripping higher. Yes, it's possible. Once I clear the hurdle of resistance, then it's game on to start shooting for 102.30, 102.60. And like I said, we close up here in the 102 plus, then I believe it's going to get sucked and pulled into this 104, 105 area, which is one of our extensions. So say that again. If we can close above this pink box, the likelihood we go visit the 102.30, 102.60 sets the tone at a high rate. 75% chance we go to 102.30, 70 plus we go to 102.69, 102.70. And by getting up there, we're likely going to continue to stair-step our way toward this 104, 105. So this would be a decent potential long. We break that, we should go up to about 104, 105, which would give us about a 3-point move to the upside. However, if we turn back down and we close below this big green line here, it sets the tone. We're going to make a journey down toward the magic fib over here in this support zone. What is that support zone? That support zone happens to be the 618786 zone of this prior move. So from this prior low up to the high, this would be that 618786 zone. So Mr. Tucson, we break below the trend channel and close below this green line, not with a wick, but with a candle body, then the likelihood we're going to get sucked and pulled down toward the magic fibbo, sitting there around 99.50, becomes very high. We don't hold that in this green box below it, and we start closing below 98.50, then it sets the tone we're going lower low. And by going lower low, which is below the swing point, it sets the tone we're going to continue to go lower and make a new low below this 95.50. So big picture, this low up to that high, you can see the 618786 zone. That's this bigger, darker green box. And the reason I bring that up, if we break below this green line, we should go test the magic fib around 99.50. We don't hold the support zone and close below 98.50. Then it sets the tone. We're going the extensions 97 and this 96.50. What if we reach 97 and 96.50? We break the 618786 zone of the prior move, which then automatically tells us we do this. Let's just say we come down here, we don't hold, we come to these extensions down here, we close below that. Then it says we have a 75% chance we go and visit 94.60. We have a 70+% chance we go and visit 93.85, which again, one tick below that 95.50 area right there says that wave 2 is not done. So how do I get very bullish? We got to get above this huge pink box up here. But in the incremental stages, all we got to do is rally to break the trend channel, close above this pink, darker pink box. And if we do that, then we go and visit that 101.50 to 102.50 area. That's where it says we close above the pink box, we're going to 102. Probably going to suck toward that 102.50. And if we close, just not like a rip up there in a quick reversal, but we kind of go up there and we close on a daily candle body up above 102, then it sets the tone. We're going to visit that 104 to 105 area. Fair enough? All right. So let's slice and dice this Ron Popeil style. We close above 102, not just a wick up there and then a close below, but actual candle body close above 102 sets the tone over the coming days. We should stair step our way toward this 104, 105 area, beginning of the major resistance zone. If we break below this magic fibbo down here in this lighter green box, it sets the tone we're going lower low. So right now we're stuck between support and resistance, and we're in trend channels. We got reasons we believe we're more likely going to break down than break out for now, but force price to prove its intentions. We close above 102, we go on up toward 105. We close below this 98. It sets the tone. We're going down to this probably 93 to 91 zone. Everybody good? So what's it going to do? That's why you be in a position of authority on the bounces. You come over here and you look at the software. And the reason we're bouncing is because the daily is turning what we call engage, disengage. We've been doing that for days now. We go over, we slingshot higher, disengage, engage, disengage, engage, disengage. Well, this behavior is conducive to another disengage. Why are we even going up right now? That's the 4-hour cycle. It's my 4-hour cycle cycling up. And notice as we engage, disengage, this is overlapping, chopping action after a run up. We probably still need some more downside. So the technical picture I said a few weeks ago when we topped out in those extensions, that the software was saying we were overbought, we needed to pull back. We had a 4-hour, we had a daily, we even had a weekly up there. So that's why we kind of talked about this. We triggered lower and then we got a little rally, we triggered lower again, and we're about to trigger lower yet again. So this rally, as you can see, there it is there, that this is likely not to continue to break out. It's more likely it's going to fizzle and go lower. My daily has been engaging and disengaging, so I would anticipate that this would red, blue, right there, the blue would turn down, the red would turn down, green will turn down, just like it did over here where it turned up, it turned back down, and we made what? Highs, lows, lower highs, lower lows, lower highs, lower lows. So this is more than likely going to continue. Why? The daily is moving in the direction of the weekly that's starting to turn over. So it's not a guarantee by any stretch of the imagination, but you can see this all important support zone that was major support over here. If you go further back in time, go to a weekly here so you can see more of it. We could see that we were for a year resistance. For years prior to that, we were support. So this red line is all important. Do we hold it to continue to break out, or do we get below it to continue to go lower? That's why we're watching this price action so closely. Notice how we tested it for years, but way back here in 2022, we started testing it and bouncing and bouncing. We did slightly get a little bit lower, but didn't last long. We bounced. And even as we finally broke it in 25, we tried to retest it, didn't hold to break it, held as resistance. And then for the last year, we've been testing it, failing, testing, failing, testing, failing, testing, failing, until most recently we broke back above it. So during this little retest, is that enough to warrant breaking out? Or do we continue to break lower? That's why this support zone is a battle zone currently. Currently, it's, I have it red, but theoretically, as this later price action, it's kind of holding a support at the moment. But I believe it's still going to fizzle and get back below. So preliminarily, I'm going to leave this red because I think it's going to turn back and go lower personally. I think this weekly is going to start to turn over in the coming weeks, and this thing's going to push back down. Technical picture says we're still not quite finished to the downside. So let's see how that plays out. Then when you come over here to these actual levels, and I know I see a bunch of lines here, but it's clear as can be, can't you tell? We're in a trend channel, a down-sloping trend channel. We're rallying into resistance where we did the last time and failed, or we're going to duplicate that move. That's kind of the plan. What if price has other options and it has something else on its mind? We got to go of this pink box. We got to go breaking above this prior swing point to set the tone. We're going to go higher. So if we see price break above this zone, it's kind of a little bit of an extended zone like I was showing you before. From that high to this low, we have a 618 retracement in here, 618786 retracement. And then from this high to that low, we have another 618786 retracement zone. So that's why these two are very important. And typically when you're in these downtrending type channels, you typically get these bounces toward the top of the channel, which kind of ironically or whatever reason, it's in that 618786 zone. Then we did it again, and we're in the 618786 zone, which is again the top of the channel. So until we break out of the channel, what's the more likelihood we're going to go lower low and keep within this channel for a while? If we can close below, just looking at it technically, see this red wick that we actually wick below that big green line? Well, if this thing turns down and we actually get a candle body close below this green line, it sets the tone. We're going to the magic Fibbo. Got it? And if we don't hold the magic Fibbo / this green box below it, then it sets the tone. We're going lower low. Lower low than what? This prior swing point. So what is that? Again, it's just repeat, rinse and repeat. From that low to the current high, we have this rally up. If we can break below the magic Fibbo, what is this green box? That is my 618786 zone. That's the key levels. So if we fizzle manizzle and we can't hold above and bounce off of this to go higher, and we actually start closing below the magic Fibbo sitting right in there, what happens? We then have a 75% chance we go to the extension down low of 1448, 1272. Got it? And if we get to these extensions down here, that breaks this pattern, which I'm thinking is potentially showing as this whole move up initially was an A wave. So that big move up was just the A wave. This correction down was the B wave. And this latest move up is the C wave. And we've been in a downtrend, and this is corrective. So we likely need to go lower low to clean this thing up. Price proves otherwise. We get above the pink box, then we're going higher high. And we get above this big pink box, then this is over. But why I'm warning you about all this, you go out to a weekly chart and you look at the prior move. We had this high back in last year when everybody was anything but the dollar, short the dollar. Dollars, you got to short it. That was that big move down. So from that recent high down to this current low over here, which is right over in this area, is if we rally and we get up there, look who's sitting there, 618786 zone, right? Well, you say, well, Gary, why is your box extended a little bit above that 786? Because you have to go back to the original top and reversal point. 4 years ago, we talked about, hey, after the dollar reached our target, 115, 120, we hit 114 and change. And we said that we were going to have a multi-year correction of this move. And if you look at that high to this low, guess who's sitting there? My 618. So that's why I extended this from this high to that low, 618786 zone. But if you take this high to that low, now your 618 is up here about 109. See it? So Mr. Tucson, that's why I extended this pink box. We get above that, it's over. Remember what I said, that wave 2 would be complete if we get above this pink box. Then we onward and upwards to our 120 to 130, maybe as high as 140 over here. Got it? So all roads lead to us going up here. Absolutely. I'm 1,000% confident on 100% scale. We're going to go up and visit that 120 to 140, 120 to 140, and the sweet spot is 130. Got it? So that's where we're headed. So I'm going to push 130 because I think that's the sweet spot. So that's where we're going. The question is, do we got to go lower low first before we get there, or we're going to go breaking out? That's where this pink box comes in. So to make a clean picture of that, that's what we have over here on this picture. If this wave 2 is over, then we need to get above this pink box. We're above the pink box. It is over, and we're onward and upwards toward that 120, 130, maybe as high as 140. But you can see, based on extensions, etc., why I think we're definitely headed towards 120 and as high as 140. Can't make this stuff up. It's on the charts. And once we get above the pink box, it'll probably take us multi-year moves. So I'm not looking, as soon as we get above the pink box, it's going to go straight to 140 or straight to 120. No, I think it's going to stair step its way over a year or so to get up there, but that's definitely the plan. So as long as we're below the pink box, we have pressure to push us lower low, right? So force price to prove it. And is this over? That's a big question mark. The prettiest question mark, but that's a big question mark. Is this over now? If this thing gets above that pink box, then this becomes extremely highest probability that 2 is over and we're onward and upwards toward that 130 sweet spot. Got it? All righty then. So back to the charting platform, and let's clean this thing up. Go back to the daily and stretch this out. And please be careful, because like I was showing you on the software, that 4-hour is getting overbought. It's getting exhausted. And the weekly is starting to turn over, and the daily has been engaging and disengaging. And this technical picture looks like it wants to eventually turn back down. So force price to prove it. We get above the pink box, we can go along and shoot for that 102.30, 102.70. We close above 102 on a daily candle, this daily candle, not a wick up there and a reversal, but a candle body close above that. Then it sets the tone. We're going to go toward that 104 to 105 zone, which is right dab in the middle of that pink box. But the reason I was cautioning you, that prior high to low, what is this 105, 107 level? From that high to this new low, that's just a 618 retracement. What if we retrace in there? Could it possibly turn down from there and still go lower low? You betcha. That's why we have to get above this pink area in order to call this done for us to go breaking out. And as long as we're below it, still has pressure to go lower low. Fair enough? And in the short term, we've been in this trend channel, just bouncing and sporting resistance, just ping-ponging between, and we're getting highs, lows, lower highs, lower lows. Is this going to end up in yet another lower high, lower low? Or do we break above this to set the tone to go higher? Force price to prove it. But if I was in a trade right now, I took this bounce because of my 4-hour reversal, I'd definitely be taking profits aggressively, because the 4 hours now in overbought territory is probably going to end up start turning back down. And I would not be surprised to see this thing just continue channel surfing for a while. And like I said earlier, if we can close below this green line, it sets the tone. We're going to visit the magic Fibbo, which in its own right is the zone of the magic Fibbo / 618786 retracement of that low to that high. And the rule is you get a retracement and you close below the 618, you have a 75% chance you're going to go to the 1448 extension, which would be below this swing point. And to add to that, if this in fact was, after this longer term downtrend, this is simply an A, B, C type of move, which again, is that the initial A? It looks like it. And this the B, and this was the C, and we're starting to stair step our way lower. Well, the proportions. We got a beautiful move up and a 618 type of retracement. That's typical where a B wave goes, or it could possibly be a 1-2. The reason I don't think it's a 1-2 going up in 3 is because where this C wave stopped, it stopped right here. If this was going to be a 1-2 going up in 3, then you typically go at least toward the 1618 extension or higher. We didn't do that. We stopped in our tracks right at the zone where an ABC ends. Why is that important? If this is a 1-2 going up in 3, then this thing should go blasting off to the moon toward that 130 target over the next few years. But if this is an ABC, we really should go lower low to clean that up. Which one's going to play out? Force price. Get above the pink box, we go long and shoot for this 102.30, 102.70. We close above 102.50 up here. Then it sets the tone, we're going at 104, 105 zone. But if this thing turns back down and we close below this green line, it sets the tone, we're going to visit the 618, 786 zone, which also is my daily magic Fibbo. We close below that, sets the tone, we're going lower low. Why would that lower low be important? If we get down this 97 or 96.50, well, technically speaking, Mr. Tucson, if that's the A, the B, and the C, and then price reverses and you take out that prior swing point low, that says we're going lower low. It's screaming it. So I'm giving you individual pieces of the pie here. We break above this, we go higher. We close below the green line, we're going lower. We don't hold the support zone, we're going lower low. And by breaking this low, it means we're going to continue that stair step lower and make a new low. And if we go one tick below this low, then that wave 2 cannot be done, right? That's back here. This is the wave 2 here. And if we go one tick lower than this, this keeps shifting down. We've been doing it for a while. Was this the low? No. We actually made it a lower low. Even during that rip higher, I kept saying, this isn't the breakout. This is not complete, and we need more downside. Well, now that we're chopping and overlapping, this doesn't look complete either. So probably we still need to go lower low toward our original targets at 87 down to about right here, 87 down to about 80. We'd like to see a lower low in this area because it fits from the 2008 low up to the 2022 high. We get a 618 to a 786 type of retracement. This is what we originally talked about. Why is that important? Because once we're down here, I'm salivating to go long the dollar, because from this 87.80 zone up to 130 is a long route. I mean, that's a lot of points. And looking at this technically, which is always very interesting, is go back to that COVID low over here. And another reason why I'm still a little bit more bearish than bullish right now, from this COVID low up to the high, the rule is you close below a 618 by a candle body, not just a wick. Well, we have weekly candle bodies down here. We got daily candle bodies. We got every kind of candle body down here. That kind of sets the tone until it's not. We're going to visit 85. 75% chance, 70+% chance we go to 82. And where's 85 and 82? Right between that 87, 80 zone we originally talked about. And that's already in the cards where we close below there, that 618, that 98, 80 area. So that set the tone. We're likely still got to go down here. But what if that's it? And we don't go lower low. We get above the pink box. These are off the table. Put a big X on them. This 85, 82 would be off the table. If price can get us above this pink box, then it sets the tone. We're going where? That 130 target up there. So it's too early to call, even though we're grinding. It looks like we can't go any lower, that it's a done deal. We're definitely breaking out. Way too early to call. We get above the pink box? Yes, I'm 100% agreement. Up and until then, we could go into the pink box, still fail, and go lower low. In this little scenario down here at COVID low up to the high, where we broke that 98 area and closed below it, we still got a greater probability we going down these 1448, 1272 zone than we're going breaking out for now. All right, there you have it. Well, what is spend so much time on the dollar index? You know where the dollar index is going, you have great insight to where a lot of asset classes are going. Least of those, obviously, would be the Forex, euro dollar, pound dollar. And while the dollar's bouncing a little bit, the euro's kind of pulling back. But off of the recent move, hadn't even tested the magic Fibbo yet. So this is a lot of support down here. This green box, this magic Fibbo area. I'm still looking for the euro to go breaking out. As the dollar breaks down, the euro should go breaking out. Inverse relationship. And that same equation I showed you a moment ago in the inverse of the dollar is this high to that low, when 4+ years ago, almost 4 years ago anyway, we're getting closer and closer to it. About 4 years ago, I made a statement. Hey, you might consider going long the euro dollar. It's going to correct over a multi-year type of correction. It's going to go up thousands of pips. That was brilliant down here. We went up thousands of pips. And this still looks corrective where we're not finished to the upside yet. And from that prior high to low, we did take out the 618 around that 112.80. You can see we closed a big candle body right there way back in 2025. Way back. year and 4 months ago. So what does that mean? By closing above that 618, we have a 75% chance we go and visit 127.45, 70+% chance we go and visit 130, 131. As long as we're above this green box, this is still a viable target. This thing turns down and breaks below the green box, this is off the table, and we're shooting for this 0.8 to 0.7 zone. We're definitely headed lower low. Like I said, with the dollar index, I was 1,000% confident on a 100% scale. We're going to visit that 120 to 140 area, sweet spot of 130. While I'm 1,000% confident on a 100% scale, we're going to go visit this 0.8 to 0.7 zone. So when the dollar's up at 120 to 140, this is going to be down here at that 0.8, 0.7, or maybe even lower. But we're definitely going lower low eventually. The question is, do we need to get up to this extension zone first, then turn down? All I can say again is, man, what if, William Bruce, we get up there in that 127 to 131 zone? I'm salivating to go short. And it'll take years to get down there, but this is extremely high probability target. And because we not only broke over here that 618 around that 112.80, we later broke this 117.50 area, which is a 786. So the rule is, based on the high to the low, you break the 618 and you close above, 75% chance you go into a 1448 extension, 70+ you go into a 1272 extension. Then later, we actually closed above that 1750 area, which set the tone and reconfirmed we're still likely going to those targets. So now you can see why I'm still more bullish of this correction to continue to go higher, even though I'm 1,000% confident on a 100% scale. We are going lower low, yes, but this still looks unfinished till we get up there. Then we can start working our way down. So what is this off the table? If we get below the green support zone, that happens, definitely going short from there and stair-stepping our way down. In the shorter term, which still could be another year or so out, this does not have to rip up here by next week. Doesn't even have to get up here by the end of the year. I made a statement way back saying this would be a multi-year correction. So could this thing drag on another year to get up there? Sure. All I know is if it ever gets up there, it's a nice time to start setting a position of authority toward the downside, because over the years past that point, we're going to go down thousands and thousands and thousands of pips to come shooting for that 0.8 to 0.7 zone. All right, clear as day. Pound dollar's in the same boat. All right, the poundy is in the same boat, and they're just chopping and grinding in here. Well, that same scenario from that recent high to low, we took the 618 out early. This happened back in 23, saying we're going to 147, 152. Fair enough. And then later, we closed above this 133.78. We're testing it right now. We're above it last week. We're pulling back a little bit now. But we not only closed above here, but a daily, a weekly, even a monthly candle. So we still reiterated. So way back in 23, we said we're going to 75% chance we're going to 147 and change, 70+% chance we're going to 152 and change. And then later we closed above the 786, which reconfirmed we're going to those targets. So just because we've been chopping and getting a little correction action in here, that was kind of the same thing when we closed above the 618, and it took us a while before we finally broke the 786. We kind of chopped sideways, but eventually we did it, and now we reconfirm we're going up there. So these targets are extremely high probability until they're not. When is this off the table and this is no longer in consideration, that 147, 152 target zone up there? If this thing breaks down below the green box, it's over. And then where's the pound going? We're going to go to this 0.9 to 0.8 zone. Again, I'm about 1,000% confident on a 100% scale. This is ultimately where we're headed. So when are we going to be down here? When the dollar's ripping up to that 120 to 140 target, the pound's going to break down toward this 0.9 to 0.8 zone. And the euro is going to break down to that 0.8 to 0.7 zone. Got it? That's the plan. So in the short term, I'm still looking for opportunities for the pound as we buy the dips, buy the dips, buy the dips, and we continue to do it, get to your position of authority. Is this going to break down and go lower low? The dollar breaks out, sure. But if the dollar breaks down and starts turning back down, this thing's going to continue to go higher. Any questions? So please be in a position of authority. If you're shorting this, then I would definitely be in a position of authority on that as well. Also, the most recent price action. Zoom this way in. So this is a level to watch. We have this prior low. We have this high. See this 618/786 zone, this big green box, kind of overlaps a prior battle zone as well. This is typical on this initial run up. We're going to have a little 618 retracement for a trend continuation. But if we start closing below 132 area, then we're likely going to go lower low. That's a big if. We got to drop another 100 plus pips or so, close below that to set the tone. We may be going lower low, but this is a very strong support zone as we speak. So we talked about this reversal, made a nice move up. Now we're looking for a retracement. So as long as we hold this 618 zone, the likelihood we're going higher high still exists. And of course, go back to the weekly, back to the COVID area where we had that prior high to low we showed you a moment ago, and notice the pound. We closed above the 618. We reconfirmed that we closed above the 786. We still need to go visit 147, 152. That's what's in the cards. That's the plan of action until it's not, until price proves otherwise. Otherwise means price has to break below the green box, setting the tone we're going lower low. Into the 0.9, 0.8 zone is my target zone, as you can see. We're above this, we need to go up here first. We're below this, definitely going down here. And in the short term, I would definitely be in a position of authority if I was shorting this because the pound took a nice little dip the last couple of days or so. I'd definitely be in a position of authority because we're getting to the support zone of interest, my 618786 zone. And do we bounce off of that and go higher high? That's still the plan until it's not. Be careful with the euro yen, still chopping sideways. We get up to the zone, we dip, we just chop. And this still looks corrective. Corrective against what? That bigger move up. So I would not be surprised to see this thing fizzle manizzle and start to turn its way down. So I'm looking for opportunities. The other day we were able to get in here and make a position of authority on that. 500 pips in one day. That was pretty cool. And then we've been chopping sideways. I warned you this is going to be ugly, but I'm really not convinced we're ready to go breaking out. We've been trying to, from the high to the low, we've been testing that zone, failing, testing the zone, failing, testing the zone, failing, testing the zone, failing. So you can see we just haven't been able to break out of this thing. And the more we fail to break out, the more likely we're going to break down. Plus, we got a monthly overbought, weekly type of scenario. And that's why I'm really not looking for this to go breaking out. And, Mr. Toussaint, we have a nice little trade we did on our London breakout. I set that to ready to trade mode. And while I was sleeping, it popped. We got our 50 pip profit. We're in a position of authority. It moved the stop loss automatically into profit. You can see. And are we going to continue this? Maybe. Right? Maybe. The great news is now that I'm in a position of authority and bank profits, this thing could turn down and will stop us out for more profit. So this is an absolute winning trade. It was all through this London pending breakout order system and trade management. It pops the lines on for you when you get into the position and it takes the profit for you. It automatically moves your stop loss for you. So this is an absolute winning trade. And in the last weeks, we had 150 pips to the downside. We got another 50 plus pips before it went sideways. And now today it went long because the way this works, it sets the London breakout, first hour in London. It will pop on whatever the high and the low is of that candle, first hour of London session. And then it sets OCOs. It'll go long if it breaks the high. It'll go short if it breaks the low. And then it's one cancels other. If when it went long, the short trade was canceled. The other day when we did the 150 pips to the downside, it canceled the long trade because it went short. So it's a brilliant system that's part of the tools for you. So please remember, you get a lot of tools in this software, along with some market analysis telling you where we think things are going. But in a strong downtrend, you're due for one of these. But I didn't have to decide, am I going to get my rally today? I just let the system pop the lines. You break the high, then you go long. You break the low, you go short. And this does it automatically for you. Not too shabby. And continuing with our system here, the euro yen still is very unlikely going to go breaking out. But what if, William Bruce, we close above this pink box? Then I'm going to go long and shoot for 188.75 and second target 189.50. That would be the plan. Only when price closes above this zone. Otherwise, I'm looking for opportunities to go short, as this sideways chop really looks like we need to go lower low. Okay, technically speaking. Pound yen, kind of in the same boat. We did reach the extension we talked about. How did we know that? We had a prior high, we had a prior low. When it finally closed above that pink box we just discussed, we gave you those targets, 217, 218. That was the plan. And sure enough, it finally got there. Now what? Likely need to get pulling down as well. We're extremely overbought. Monthly's overbought, weekly's overbought. And we've been seeing this cycle, but that's why we use these techniques with extremely high probability outcomes. And what happens if we get down below and we correct this? We should go lower low. This is still overlapping and chopping. We had a nice run up. Well, let's go back to COVID. Remember, we keep talking about those COVID lows? And we talked about it with the euro and the pound, looking at the high to the low, kind of set the tone. Well, back at the COVID low over here, I made a bold, not a prediction. I don't predict. I leave that to the prophets. I made a bold statement, and I can anticipate with the best of them. That's why we call this software the Market Price Anticipator software. Said you might want to consider going long the pound yen, because over the next multiple years, this thing is going to run about 8 to 10,000 pips. It's in the archives. That wasn't a bad call. And we talked about looking at this technical picture, and we said, yep, we need to go back to this high and make a new high to kind of correct this system that if you look at it on a monthly chart, this thing has been pretty bearish, right? See if I can pull all that data in. You can see this thing has been going lower low, lower highs, lower lows, lower highs, lower lows. And as we've been doing this, we needed one of these bigger corrections back to the upside. We got what we needed. So now we're back to the same thing we are in these, where we're monthly overbought, weekly overbought, daily overbought on the software. And what are these big down moves? That's what happens when we get a financial crisis. .com bubble burst over here, went down 9,000 pips. 2007 financial crisis went down 13,000 plus pips. What's the next one? Elizabeth, I'm coming to join you, honey. And it's going to go down major move to the downside. Is it this year? Maybe. Is it next year? Maybe. I don't have the exact timing, but that's why I'm looking as we get to these extension ports up here. We're due to go down. Most recent price action, we need a correction. So this is why I get to my positions of authority. And then eventually these things run thousands and thousands of pips if a financial crisis hit. So what's the prognosis on our next financial crisis? That this pound dollar is going to go, the yen's going to strengthen, the pound's going to weaken during that period. So the pound yen goes down during financial crisis. Well, we're batting 100%. Every financial crisis, this thing plummeted 9,000, 13,000. What's the next number? How about we split the difference and do 11,000? A lot of pips. So you can see why is this extension, remember COVID, we said we look for this. Now I'm looking to get that same position here for multiple years. I'm looking for that same multi-year type of deal to come back down. And once a financial crisis hits, this thing is going to go ripping to the downside, like we did the prior two. Fair enough? There you have it. Be careful. And we're likely going to get more downside on the pound yen because, again, we reached our extensions and now it's time to probably visit the magic Fibbo around that 212, maybe even lower low, having some targets, extensions below that. But you say, well, Gary, all I see is lines everywhere. That's because we break it down on multiple time frames and multiple swings and ebb and flow of the markets. And the last one was we need a correction to the downside. Fair enough. When we finally broke above the pink box, we specifically said, well, based on that, 217, 218, we went up there a little bit dipped into 219 toward that 1618. Well, now that we reached that 1618, we're even more likely we're going to get a bigger correction. I digress, but I think you get the point. So what else? How about the markets? Are we going to go breaking out? We're getting a little bit of a bounce today. Woohoo! Is that a good thing? Markets are bouncing. Well, we're still at this lower high trend line. We're still chopping sideways. That initial move down, correction to a lower high, another push down, correction still at lower highs. All of this sideways move after our big run up. Remember in April, I said, you might want to consider going long here. This thing's going to go back and retest the highs and likely go all-time highs. Actually went a little further than I was anticipating at the time. But now we're getting the same type of progress where we really need a lower low before we can set the tone to make another all-time high. If we get above the pink box and we break the prior trend line, then yes, we can shoot for all-time highs again. But this looks very similar to what happened way back from last October. So I'll go to a daily chart, it's a little bit easier to see, and then zoom this in for you. So over here in October, when we started to chop this way, we talked about this, and we said we really need to get a lower low. So we kind of had that initial move down, chop, 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 chop. And I kept saying for months there, we really need to get a lower low before we can then go breaking all-time highs again. And that's where April came in. I said, this is salivate country, guys. We got the lower low. The technical picture's been satisfied with the last run up. We got the correction we needed. Now we're open to go ripping higher again. Now it looks like we're doing the same thing. This type of procedure is what we're doing over here on a smaller scale. But we probably need a lower low to clean this up like we did over here. Needed that lower low. So notice right now, we're kind of doing the same thing. If you're scalping this to the upside and you're a scalper, be in a position of authority. Don't look to get greedy where you think this thing's definitely going to go breaking out. I don't think so. I beg to differ. Price action is begging to differ too. All this chopping and overlapping suggests we need to get a lower low. Lower low than what? That low over here, which would basically be sucked and pulled down to this magic Fibbo. So I'm looking for at least a decline toward the magic Fibbo. Amen? And that's what happened previously. And I'll just scroll back. And we kind of did the same thing where we had all this, kind of had the initial move down. We kind of up here and we started to chop and chop and chop. Even though we made a slight higher high, I kept saying, all this overlapping action still says we got to go lower low. That would clean it up to warrant us going on to all-time highs again. And we're doing the same thing again on a smaller scale. But look how long this thing took. From October over here, October high, took that initial move down. And then it took us multiple months before we finally broke the low to make a new low. And it went from the low of November of 25 to finally March of 26. December, January, February, March, took about 4 months. The initial move down, this chopping and overlapping, took about 4 months to finally play out before it made the lower low and then went ripping to all-time highs, as expected. Now what? Kind of the same thing again. Look at this, chopping, lower highs, lower lows. It's gnarly looking. Remember the last contract, this kind of looks like we made a higher high, but we did not. This is the futures contract for September, and you can see we clearly, Mr. Tucson and others, did not make a higher high. So what do we know about a big run up, which was anticipated, and now this correcting, overlapping, 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 overlapping? What's the likelihood we go blasting off? Very low. What's the likelihood we continue to sell off? So that's why I kept saying any rally should be sold for the last multiple months, because we really need a lower low. So be careful. Again, you have 45 points. I know people die and go to heaven with a point, one contract and get 1 point. They're thrilled. Well, this 45 point is likely going to fizzle and sell back off because, again, this same type of price action illustrated what it needed to do before it could go ripping. That was not that long ago. And this is on the contract, so you don't see a whole lot of data in here because it's this current contract for S&P minis. but we really need that lower low before we did this. Now we're doing it again. So the likelihood we need a lower low over here before we can go breaking back out is still very strong. Fair enough? So back to ES where we got all the data in here. So this rally, unless it breaks above this lower high trend line, then I would shoot for 77, 77, 60 area, but basically 77 if we can break above that line. And I don't mean just a little wick up there. I mean a candle body close. Then I'll change my tune. We're going shoot for these targets. But in the short term, this overlapping chopping action, I preached to the choir for weeks and weeks, right, Harold? We're going to do it. We really need a lower low before we can go ripping. And it finally came true. And we're still doing it. Like another mini me of this bigger version, a mini me of that. So any rally should be sold, in my humble opinion. And if you're up, great, take some profits. Could it go higher? Anything can happen. Is this thing likely to go breaking out? No. Could it happen? Yes. And is this thing more likely to fizzle? Yes. That's why you take your profits. NASDAQ is even worse. Look at this guy. At least ES was that's where the divergence came in I discussed last week. It looks like it wants to go breaking out. It kind of rallies to here and it wants to go breaking out and doesn't. And it rallies to here, looks like it wants to go breaking out and it doesn't. So this is why I still think whether you're trading the index or the actual futures, still think we got to go lower low than that swing point low over here. So more than likely, this thing's going to fizzle and go lower low. Fair enough? And then, because this looked more bullish, look at NASDAQ. How ES from the recent high to low, it did take the 618786 out, thinking it was going higher. But it didn't. And then it did it again on the smaller scale. Took the 618786 zone out. Looks like we can go higher high. I warned you about this last week, did I not? I said, even though it looks like we're going to go visit 76 plus, maybe 77, I'm not so sure because we got divergence between NASDAQ. And I said the swing vote came with the Nikkei. Global liquidity says we really need to go lower low. And ES responded accordingly. That was even in our analysis last week. Expect markets to continue to sell off. It did that going from Thursday to Friday. It sold off beautifully. Now, Monday, we just kind of chopped around. Today, we're kind of doing a little bit of a bounce, but it's really the same. Amen? It's doing pretty much the same. So I'd be very cautious with this bounce. If you are long, take your profit, because the likelihood this thing goes breaking out is much lower than the likelihood this thing fizzles and goes lower low. And even though ES does look more bullish, look at NASDAQ. It hadn't even made an attempt to look more bullish. Nice little bounce today. That's okay. I'd be doing the same thing with that. We almost got our lower low on the NASDAQ. So the initial move down, correction, and again, this is misleading. It looks like we made a higher high on the NASDAQ, but we did not. Again, go back to the futures and look at the September contract. And yes, indeed, my friends, we did not make a higher high. Amen. So what do we have in common? Got that beautiful run up. We said the same thing with the NASDAQ, all this chopping. And in this one, we didn't make a higher high back then in October coming in here. And I kept saying the same thing. Harold, all this overlapping chopping action is screaming, we got to go lower low. Lower low than what? That prior low to clean this up. Actually, it's a little bit over that way more. Clean that up before we could go breaking out. Now we're doing it again. So this rally should definitely be take profits and look for this thing to fizzle manizzle. And we almost made a lower low on this current contract. Almost. This one right here. Yep. Just the other day, we dipped close. We still need a lower low. So any rally should be sold and look for this thing to go down toward the magic fibbo on a daily chart, which would put us right around that 28,000 to 27,000 zone. Fair enough? So be careful. I'm not going to take this NASDAQ seriously about breaking out. Like to see a lower low to clean this sideways chop up. Would make it nicer like it did over here. Said the same thing way back here in October high. And then we kind of grinded and rallied to a lower high. And I said the same thing right here. All this overlapping chopping is screaming. We're very unlikely to go ripping higher. We really need to make a lower low. So we started chopping. We came close. Kind of sounds familiar, right? And then when we came close, we started to rally and chop and overlap some more. And then we did it again, came even closer, and we chopped and rallied until we finally got the lower low. Then in April, we said, you might want to consider going long here. This is time we can go breaking out. Well, this is another mini me. This thing could chop sideways, and it doesn't have to go breaking out anytime soon. It doesn't have to go breaking down today or tomorrow. But it could chop in this zone for a while and then finally give us the lower low to set up then the Santa Claus rally maybe into next year type of move. So I'm not trying to tell you sell it now because it's going to be down here tomorrow. Sure, anything's possible, but this is a likely target, extremely likely. So the same reasons we did this to get a lower low to set the tone, we really need another lower low for the same exact reason. Got a nice run up, corrective overlapping, needed a lower low before we went all-time highs again. Now we're doing the same thing, corrective, we need a lower low before we go breaking out. And last week we said with the divergence between ES looking more bullish this last week, because we were up here, looking more bullish than the NASDAQ was not. So that's why I kept saying sell the rallies. I don't think ES is ready to go breaking out. We used our global liquidity, the Nikkei, and it looks like the NASDAQ. Not even close to being bullish right now. So even though this little correction, fine, it's still likely going to go lower low until we break above the lower high trend line, until we break the 618 to the upside. So you use your 2-point tool. We have a high right there, and we have a low right there. So we need to get above this resistance zone up here. Everybody knows what's coming. 618,786 zone. So in order for us to take this Nikkei seriously, where global, and I use this as a proxy for global liquidity. Why? 98% correlation between the global liquidity and the S&P 500. And that's what set the tone last week to expect the markets are going to sell off. And they did that going into Friday, and now we're bouncing a little bit into this week. But we've been seeing the same time. We sell off, we bounce to a lower high, we sell off, we bounce to a lower high, we sell off, we bounce to a lower high, we sell off, we bounce to a lower high, we sell off. Trend needs to continue until it stops. So up and until this can break above the pink box, then I'd look for some higher highs. But that's a big if. We got to close above that, not just spike up there, but close above. Otherwise, I suspect this is going to fizzle and go lower low. Fair enough? All righty. And that was the swing vote. So be careful with ES. Until we get above the lower high trend line, then we can look at some extensions to the upside, basically 7,700 to 7,750 area. Otherwise, this rally is probably going to fizzle to go lower low, and we're looking lower low to below this low over here. So we're talking that 7,200 down to about 7,000, and you can see my magic fibbo is right in the midst of that. So the probability this breaks out now is low. The probability this continues to sell off and makes a lower low, comes toward the daily magic fibbo, is very high. What if, William Bruce, we start getting some bearish sell-off and we don't hold the magic fibbo, and from the prior low to high, we don't hold this support zone. Well, if we start closing below the magic fibbo, we're going to test that. We don't hold that, we're going lower low. And who's sitting the extensions down here to go lower low? What is the rule of thumb, Harold? From the low up to the high, you close below the 618, right around that 6,800 area. We close below there, we're going down to 61, 66,000 range. And who's sitting down there is that weekly magic fibbo. Perfect. I still would love to see this fall in the fall. And if we can get down in here, Emil, man, if we can get down in here in the fall, like September, October, something like that, we're sitting down there. What would I do? Buy the daylights out of that thing going higher. No buy, sell to hold recommendations. I can't tell you what to do, but that was the plan in April to go ripping higher. And that's the plan. Well, that's back here, this past April here. That was Liberation Day low there. Same kind of principle. Correct sideways, run, correct sideways, dipped into the run. So if we can get that bigger correction, man, salivate city. Am I guaranteeing it's going to get down here? No. I'm not even guaranteeing it's going to get to the daily, but the technical picture really says we got to go lower low, and that's exactly where lower low would be. Daily magic fibbo. Any questions? So, be careful. Take aggressive profits on this bounce. If we do break above that prior swing point, above this lower high trend line, then we could shoot for 77, then 77.50. Otherwise, rally should be sold till we get lower low, and then we can talk about once it's down here, do we buy then? Or if we start breaking lower, we salivate to buy way down in here. We shall see. What about the Russell? Russell's still holding bullish. Unlike unlike NASDAQ, looking still more bearish, this is still looking a little more bullish, is hanging on by a thread, but we broke out and we're retesting that prior breakout zone. So as long as we're above this, we still have the chance to go up and push toward that 31,000. That was the original target. We were just a little shy there. We didn't quite reach 3,100, but if this thing holds and we can go breaking to a new high, then your next target would be that 3,100. If we close below the support zone, was former resistance over here, support over here. If we close below that, then it sets the tone. We're going to visit the magic fibbo right around this 28/2700 zone. Okay, so say that again. If we can break this prior swing point, so we're kind of correcting here, we can break the prior swing point 618,786 zone from the high to the low, then we could shoot for 3,100. As long as we're below that swing point, we got that swing point, we got this swing point, we got the last swing point. So there's a lot of resistance up here. So I'd really like to see us break that lower high trend line. Then we could go long to 3,100. But this really looks like it needs to go lower low. So if we close below this support zone, what is the support zone? Right here. We tested, tested, went lower. Finally broke above, retested as support. So basically that blue line right there, I'll make it, let's put one on here so it'll be on the chart tomorrow. Use this line here. So this is the area we want to see break. If we break to the downside, aka a daily candle body closes below this line here, then the likelihood we're going to come visit this magic fibbo is extremely high probability. If in fact we can start closing above that swing point here and this swing point there, so this zone we close above that, then we're going to 3,100. We close below the purple line or blue line, whatever color that is, then we're going down to magic fibbo. Got it? All right. In the interim, chop, 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 chop. This thing does not have to go breaking out. It does not have to go breaking down. This thing can just keep chopping, watching the grass grow and the paint dry. But we close below that line. We're going down to Magic Fibbo. We break above this. We're going to 3,100. All right. All righty. Let's continue. Any questions on ES, NASDAQ, the markets? I kind of term that as the markets. Again, NASDAQ, even though it looks like a nice bullish, 500 points. Serious command of the markets. Serious command. This is nothing. Yeah, it's 500-point bounce, but this is likely going to fizzle and still go lower low. All this chopping and overlapping what we just discussed. And after a big run up, this first initial correction down did not fill the bill. And since that initial correction down, which we warned you, it was a beautiful thing, but even this rally, again, that's not a higher high based on the actual contract. So it is still at lower highs. How do I know? I can go to NDQ, go to the index. Clearly see we got a lower high trend line up here. We have a more severe lower high trend line. So the fact that it's bouncing today, 500 points, woohoo! The likelihood this thing goes breaking out is very low. The likelihood these rallies are going to fizzle and go lower low, still good. And we still likely need another lower low. It was close. I mean, it's possible that that was the end and it's ready to go breaking out. But it's really looks like it really needs one more push. Amen? So how do I take this rally seriously? You go from the recent high to the recent low, and we got to get above this 29,830,002 zone. So this is resistance up here. That zone right there, my friends. So if this is serious and we close above this area, then by all means, I'm going to be shooting for 31.1, 31.4, maybe even 32 up there. But the likelihood that this rallies and closes above that to set the tone to go to those extensions is very low. And again, not only do we need to break above this pink box, we got to break above this lower high trend line, and we have a couple of them. There's a recent one and this more pronounced one that we still have to close above before we take this seriously to the upside. Otherwise, be glad you're up 500 points if you're scalping that to the upside, and I'd be very much aggressively taking profits on that, because the likelihood this fizzles to go lower low is still very high. Amen? All righty. What about black gold Texas T? We're in the danger zone. Remember what I said, that if black gold rallies and starts breaking up into this zone and we get up into the mid 80s to maybe low 90s, turn down and find support at the magic Fibbo, and then goes breaking that high. So what am I telling you, right? Technically speaking, how this continues to grind a little higher to the mid 80s, we're almost there, to maybe the low 90s, so somewhere in that mid 80s to low 90s, which we're getting closer to. If we can get up into that zone, pull back to the magic Fibbo, bounce off the magic Fibbo, then take that high out, that sets the tone for 150K. Ouch. 150, not 150K, $150 a barrel. That's the 150 to potentially opening the door to 250. So we see this type of price action. It rallies up, it pulls back, holds the magic Fibbo, bounces and takes that high out. Conservatively, I think we're going to make a run toward 150. If it gets out of hand, it could push toward $250 a barrel. What? There's no way that can happen. It's on the charts. Is it going to do it? That's why we're watching its price action now. So what takes away from it? We have a low. We're going to have the high. I don't know if that's the high already, and we start retracing, or I'd like to see it, if this is going to be that more bullish scenario, get to the mid 80s, low 90s, then retrace back to magic fibbo to bounce and then break a new high. That's your 150 target. If we turn down and we don't hold the support zone, then it sets the tone we're going lower low. What's it going to do? I'd definitely be in a position of authority on this bounce because we're still at a series of lower highs. We saw what that did for us since 2022. We kept going lower. And even as we talked about Harold, we probably got to go lower low one more time before we go breaking out unless rockets went flying. Well, that's what happened. And now this technical picture, we came down to where we could break out, go to 150. It's in the charts. This baby is all over these charts. Go to a weekly, 150. It's there, my friends. It is there. So when do we get a big, warm, and fuzzy? We go into 150. That recent high, the rockets flying high there, got the low. Now we're bouncing a little bit. We get above this 101.60, 114 zone. That's my high low 618786 zone. We start closing above like 102-ish, 102, 110 zone. We close above that. Likely we go into 150 is extremely high probability. I know that's a long way off. We're at 84. We got to go up 20 bucks or so to set the tone. We're going to 150. Yeah. So that's why I'm saying you need to take aggressive profits. So this is not a given. We're definitely going to 150. But if price action, go back down to the daily because it looks better, and you zoom that in, if this rally can continue a little further, get into the mid 80s to the low 90s, or even a little higher, but anywhere up in this zone, we turn down, hold the magic fibbo, and then we bounce to break that high, whatever that is, 150, here we come. Gnarly as that sounds, that's exactly what's on this chart. Now, I'm not trying to tell you if this thing comes down and bounces and it does this, yeah, extremely high probability. But as it turns down, what if it doesn't hold that? And we break back below the 618786 of that low to the current high, we get below that level, then it says we go on extension lower low. So is this part of the obliviation and we continue this process? And then we say Strait of Hormuz is now open. They come to an agreement. This thing will sell off real hard. We've seen it. Just the idea MOU, it sold off hard. And now there's continue bombing because they don't, people are insane. I digress, but don't get me started. That if this continues and they keep bombing and doing, this thing will probably keep going. And if I see the technical picture, retrace, break the high, I know where I'm shooting for, 150 up there. Any questions? All righty. We'll see how that plays out. Then once we have the low in the high up in here, that's why this 618 retracement, which will be right at that magic fibbo, can't make this stuff up. We get to that low 90s I was talking about, we get a retracement back to a 618 zone, right where the magic fibbo is. So if that plays out, my friends, we rally up here, we retrace, we hold that 618786 zone, and we bounce off of the magic fibbo. We take out the prior high, 150, here we come. I keep reiterating that, but that's exactly what's on the charts. If not, we come to some sort of agreement, this thing will go lower low. All righty. What about gold? There's gold in them there heels. Was this last lower low enough to warrant a big reversal? This still looks like, even though we're bouncing, this still looks like we need one more squirt lower low. Ideal spot would be 38. So I've been calling for 39/37. Was this dip into that enough? Still looks overlappy and choppy and corrective. This really looks like it needs one more thrust. One more thrust to get lower low. What's the plan? We talked about we could nibble when we made a slight lower low. That was the nibble. And then if we do get the lower low and we start hitting 38, 37, that is the sweet zone. I believe that's on my charts as well. Gold and silver, when they make another lower low, buy zone. How about that? We question, has gold bottomed with that newest lower low that was a few weeks back? Was that enough to warrant the reversal? Maybe. It may have been the bottom. That's why we nibbled down here. Well, what's the plan? Gold's going to go ripping to 7 to 10,000. I'm 1,000% confident on a 100% scale. Gold will reach 7 to 10,000 target. No ifs, no buts, no ands. It's going there. Question is, do we need another push lower? How spot on where we were during this gold train? Hey, the gold train is going to come to a stop and we're going to get a big gnarly correction. So watch out on that correction. Be sure you're taking profits up here because it's going to get ugly. And once we got this lower low over here, I kept saying, as long as we're below 5,000, we got to go lower low. Overlapping, chopping, you get the rhythm and the method. That says we need to go lower low. We got lower low, and even with that lower low, kind of overlapped and chopped there. So that still doesn't look like it's finished. It looks like we got one more thrust. And this thrust is too overlapping to be the end. It's possible, but still unlikely. What would really set the tone, ladies and gentlemen, Harold, we get one more sell-off down below 3,900, between 39 and 37. So below 3,900, ideally 38 is kind of my sweet spot. What happens if gold hits 3,800? I'm buying. And what happens if I already nibbled some? I have some exposure, but I'm going to add up and more exposure gets to 38. What if it bounces off at 38 and goes even lower? Back the truck up anything lower than that. If we could possibly get a weekly magic Fibbo visit, which is in the mid 3,000s, I'm not saying we're definitely going to get there. We probably won't go that low. But what if, William Bruce, we actually sell off down to there? Man, that is extreme buy zone. Back the truck up kind of thing. Because we can get to, say, 3,500. That's a double minimum to get to that 7,000 to 10,000. And we get down here, it could be a triple. I like it a lot. And the current price action, again, even though we're bouncing today, look at all this overlapping. Doesn't really look like, well, that's a bottom reversal. We're ready to do a new trend back to 7 to 10,000. That looks too overlapping. So one more thrust lower. Set some alerts down in here. Set your alert. Gold hits 3,900 and lower. Be sure you start nibbling. And again, I can't tell you what to do, but that's the plan. As again, I already started selling some puts on our ETFs. Why sell puts? Because I get some premium. And what happens if it dips down and I have to buy it? Great. I'll buy it at a lower price. Any questions? So part of the nibble is I'm looking to establish whether I go buy a gold bar at Costco or whatever you want to do. Many ways to play it. Leverage ETFs. We got miners, B, AU, all the miners we talked about the last couple of weeks. Still looking to establish positions on those. Is this thing ready to go breaking out? It's definitely going to go breaking out. The question is, do we need to go lower low first? And I'm still looking for that lower low. it would definitely clean that picture up. Silver's kind of in the same boat. We did get a slight lower low on silver, unlike gold. We did not. This one did. Is that the end? Maybe. Maybe. I still want to see silver get one more flush. And if gold flushes, right? If gold flushes and we drop $100, $200, $300, pushing us down lower, I can't imagine silver is going to go breaking out during that period. So if we get our last flush down on gold, drop a couple of 100 points or so, then I suspect silver is going to drop to another lower low. And if silver can get anywhere near $50, is a steal of a deal. Am I guaranteeing it's going to get below 50? No. But boy, if it does, salivate country. Amen. We're at 59, got a nice little bounce going. Is that the end? Still pretty choppy and overlapping, but this one's a little bit more of a warning, right? Gold did not, from that low here, did not make a lower low. It's at a higher low right there. So let me zoom that in for you, Harold, so you can see that good. Silver did make a lower low. Gold did not. I like to see them do it together. Came close, but that is at a higher low. And silver made a lower low. Is that enough? Maybe. This thing could, we know it's going to 7 to 10 no matter what. Question is, do we need one more flush? And I like the overlappy part, do one more clear flush. That was not a clear flush. It's still at a higher low. I like to see a clear flush down in here. And it may not last long. I'm not trying to say, well, Harold, when it gets down to 39, 38, or probably stay down here for 6 months, a year. No, I'm talking about a quick little overkill sell-off and a big rejection wick back to the upside, like a reversal, intraday type of reversal thing. I would not expect this thing just to chop and grind lower and lower and lower for months. Once we get the lower low, it's probably going to start bouncing out of there very quickly. Fair enough. So without the lower low on gold, we still need one, would clean us up better, because from the last low, we've been overlapping, 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 and need one more flush. So silver, even though it did make a lower low, yes, that could be the end. But if gold gives us a flush lower, silver should do it too. And the closer we get to 50, and any day silver hits 50, I'm loading it up. 50 at lower is a steal of a deal. Why? Because our target is 150 to 200. So just getting at 50, that's a triple X minimum, and likely a 4X as it pushes toward that 150 to 200 zone. So be careful with this. If you bought some silver and you got a little something going, that's fine. Because whether you bought it at down here at 55 and you're at 59, think, ooh, I made a little profit. And then it sells off again and we get another lower low. Don't panic. Just keep adding to the position. 50 and lower, I promise you, is a steal of a deal. Target 150 to 200. Amen? Clearly targeting 150 to 200. So, still would like to see one more flush. And Mr. Tucson, man, if we could flush down into the below 50 and get anywhere near this upper 40s, mid 40 to upper 40 right there where the magic fibbo is, this thing touches that magic fibbo, bleed, bleed, bleed. That might be the end of it if we can get that far, and that could set and rejuvenate this thing to go ripping. I'm not trying to tell you once it hits this, it's going to be at 150 by next week. Probably take a year or so. Kind of just, well, use my marker. Kind of just stair step its way up there. One of those. It doesn't have to go parabolic. It could take some time and chop and grind, but it's still headed that way. Any questions? So one more lower low would set it up beautifully. especially with gold not making a lower low. Silver did, but gold making a lower low would probably pull silver down as well. And anything near that 50, you see, I got an alert there. Man, silver ticks 50 and lower. I'm loading it up. And many ways to play that. Silver miners, you can buy ETFs, leverage ETFs. There's many ways to play it. Buy silver bar at Costco. All righty then. And Bitcoin. Bitcoin's up beautifully today. Looks like we're going to probably make a run toward that daily magic fibbo. Be careful. This is beginning the sucker's bet right now, Harold. What is the sucker's bet? That this is the end. We bottom. In my humble opinion, very unlikely. And this is looking three-wave corrective. And from the recent high to low, you close above the 618 today, 786 zone. We wicked and closed right at it. So likelihood we go up to that 69.70, make a run toward the magic fibbo. This would be the sucker's bet. Ooh, it's breaking out. I better go load the boat on Bitcoin. I'm telling you. And then it's going to rally in this area and go kerplunky. Just enough to get people's hopes up that this is bottom. I'm so smart. I started buying Bitcoin at 50,000, 60,000, this low upper 50s here. Man, I'm smart. It's breaking out. Look how good I am. And it gets toward that 69, 70,000 range, magic fibbo sitting there, and it gets rejected. So the plan is to buy Bitcoin at 50,000 and lower. And if we get 40 is the sweet spot. If we dip our toe into the 30s, that is get on your knees and look to the heavens and go, thank you. But the plan with Bitcoin is the same. We buy low, we sell high. And in my humble opinion, I don't think this low is yet over 50 and lower. That's the plan. Any day Bitcoin hits 50,000, buy some. Goes lower, buy more. Goes lower, dips its toes in the 30,000, back the truck up. You can buy ETFs right now with Bitcoin because it's possible this could be the end because it did make a lower low as well. So selling a few IBIT puts, bringing some premium. If it turns out I get awarded those shares down here, great, because I'm looking to buy and get into position of that. And the lower it goes, I'm going to continue to add and then look for not only buy Bitcoin, but some leveraged ETFs and many ways to play it. I don't think this is the bottom in the reversal yet. Typically, why is that the case? The calendar. You go back all the highs where we peaked out 12 to 18 months post-halving. That's the blue line. When we peaked out 12 to 18 months, typically it takes a year from the peak to the trough. From the peak to the trough. And here we did it in November. We bottomed in November. Got it? Everybody with me? So we peaked in October. We should bottom in October. We're not there yet. So if we buy low, sell high, buy low, sell high, next halving is going to be April, May of 2028. Right now it's May, but that could change a few days here or there. The way that works, when the blocks get solved and they're ahead of schedule, they make it harder to solve the blocks. When they're behind schedule, they make it easier to solve blocks. So right around here in May of 28 is the plan. We go next halving. And 12 to 18 months post-halving, we're going to be into fall of 2029. And we're anticipating, projecting everything, but predicting we're going to be at 200,000 and above. Just like when we're here, 20,000 and lower, I said it's a steal of a deal. It's like committing a crime to buy Bitcoin at below 20,000. The plan was to go to 150. We reached 126 and change. Didn't quite get there, but buying below 20, selling above 120, that's a steal of a deal, right? So this is the same thing. We get 50 and lower, that's this. Ideally in October. is the plan. In the history of these, it typically tops and 12 months later, it bottoms. Tops 12 months later, it bottoms. Then we go on the next halving, tops 12 months later, it bottoms. 12 months later, once it tops, we get the plan. So how you continue to rinse and repeat, you can see we topped out in 17. We topped out in 21. We topped out in 25. Everybody getting the drift? And then we bottomed in 22. We bottomed in 18. We bottomed in 14. So we're bottoming in 26, right? We're in 26, but we're just not quite that 12 months out. Amen? So no buy, sell to hold, but when it gets 50, I'd start buying. It gets 40, I'd buy a bunch more. It dips its toe in the 30s. That's like this down below 20,000. Just load it up. And then we do what? We hold it until fall of 2029, my friends. That is the plan. Buy low, sell high, buy low, sell high, but drill down on current price action. And we still look like we need another lower low. This was expected. I kind of warned you about this. We'd get maybe a run up to the extension. Now that today, we're actually closing above the pink box. Can we hold it? It's a big, you got to hold it. Like the other day, we looked like we were going to do it, but we didn't. Now today we're above it. The likelihood we drift up here a couple of thousand or so more at 69, 70,000 range looks good. It's also from the recent high to low. It's the extension, 68, 69, Magic Fibbo, all in the neighborhood. So what's the plan here? This is probably going to get the suckers bet going. Woohoo! Bitcoin's breaking out, dude. We're going to, Gary said, over 200,000. That is correct. I said that. I still believe it. But I think this is still going to go lower low. Amen? Even off this rally, this is a nice rally, corrective, overlapping. This looks bigger A, B, C, and one more flush down to 50,000 and lower. Got it? All righty. Let's circle the wagons. ES, be careful on this bounce. Please be careful. Be careful. We're at lower highs. We gave you all the reasons why. NASDAQ, even with a nice rally, still at lower highs, overlapping price action. We need a lower low. Screaming lower low. We reiterated that from a few months ago. We had the same thing. Scream, we need to go lower low before we could go breaking out. This says the same on like a mini-me version. We need lower low. So these rallies should be sold. And look for this lower low to come in. And an ideal place to go visit would be the daily Magic Fibbo. ES, the same boat. It looks more bullish when it's really not. We went through the contract scenario. And when in doubt, you can go to the indice. And you could clearly see NDX did not make higher highs. So ES, that looks like it did not. When you go to actual contract, it did not. The rollover part did, but you get the point. And this is likely still going to fizzle, go lower low. We need a lower low to clean this sideways overlapping mess up. Lower low would fit the bill, just like we did the same type of thing over here. We chop sideways, sideways, sideways until what? So the likelihood we go breaking out from here is low. The likelihood we need to make a new swing point low would be great. Once we get that, then yes, we could go on to make new highs. Now we're doing the mini-me version of this. What if I'm wrong? We close above that prior swing point up there, then we could shoot for 60, 76 and change up to 77 would be the ideal target. Got it? Otherwise, lower low. Daily Magic Fibbo is what we're looking at. Any rally should be sold, in my humble opinion, because we really need to clean this overlap up by making a lower low. NASDAQ is clearly even worse. obvious it needs a lower low. We came close. That was an initial move down. We came close, but not close enough. And yes, the same rule here, how it looks like we made a higher high. It does. I admit that. That's the rollover. But you go back to the contract, and clearly we did not make a higher high. Now, on this contract, interestingly enough, we actually did make a slight lower low on that contract. Is that enough to warrant going breaking out? Maybe, but it's contradicting with the NDQ. We did not make a lower low. Very close, but still looks like we need a lower high, lower low to come. Still chopping and overlapping. And to tie the swing vote is the global liquidity. It too did not kind of reach where we expected down here toward the magic Fibbo. We're in the same boat. We got these series of lower highs. So until this rallies and breaks that lower high trend line, closes above this pink box, then we can look for higher highs. This is likely going to fizzle and go lower low. So be careful. Amen. And also, a couple of throws in here. SpaceX. We're going down to 60 below 80. Well, 70 and lower is kind of the target. You know the rule on this, and if you don't, it's quite interesting. 95% of all IPOs, upon the date they list on the market, and SpaceX was 135, it opened trading at 150, but the IPO price was 135, right? 135. So SpaceX is going to go down to 70 and lower. That's the plan. When it gets to 70 and lower, that's when I'm going to start buying. Because 95% of all IPOs, upon the initial offer price, and in SpaceX's case, it was 135, they go down 50%. 95% of them. That's a pretty good, strong basis for this thing to go down to 70 and lower. Amen? Half of 135 is 67.50. I'm just triggering at 70 and lower. And then we look for this thing to go ripping thereafter. And I don't mean instantly, but the initial shares, only a small float came out initially. And then 1 year and a day later, we're going to get the big float. So up to 99+% of the float will be available. And where do people buy in the retirement accounts, ETFs, this kind of thing? From the float. So not many people got a big float out of 4%. The big float's going to come when 99% of the shares are outstanding. And I don't think Elon's going to sell at this point. I think he's going to hold on, but still the float for everyone else will be over here after next year. So the plan for this thing to do, like I've been saying, continue this down. It could take months. And we come in the next year. Anytime it hits 70 and lower, I'm going to start building a position. And then once we get the release of all this additional shares and ETFs and all the big hedge funds and all can start buying, retirement accounts, etc., the float will be available up to 99% after this day. Boom. That's when this thing should take off. Amen? Any questions on that? That's any IPO. This one started at 135, started trading at 150, went all the way to 2+. And I warned you during that rally, I said, look out. Everybody that got in well before this is going to be selling when it pops, and it's going to leave everybody else FOMO and buying way up here. It's going to come down. So now we give you ahead of this, say, no, I wouldn't really be investing in a big amount until it's at 70 and lower. then this thing can recover, especially when the float comes 1 year and 1 day next year. Amen. From the day it was released, a year and a day later, the rest of the float comes out. We're up to 90%, only at 4.9% here. That's a lot of float for a lot of ETFs and a lot of shares for everybody to start buying. And that's why price is then going to go soaring. Fair enough. That's the plan. Again, no buy, sell, the whole recommendation, but my plan is to start buying at 70 and lower. I have my alert set right there. You can see it. Buy SpaceX at 70 bucks and lower. So I'll buy some at 70. It goes lower than that, I'll buy a bunch more. Goes lower than that, I'll buy a bunch more. Keep adding, and look for this thing to go taking off sometime after the float is released. And typically you get a 50% haircut in the first 18 months. So this thing can grind down in here any moment. What happens if it's trading about 70 bucks tomorrow? I'm buying. Next week, I'm buying. Next year, I'm buying. Right? 70 bucks and lower is the plan. All righty. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Remember, these market conditions are very volatile. Between the Strait of Hormuz, open, close, semi-open, battleships going through, some getting hit, some not, blah, blah, blah. There's talk of this, there's talk of that. So this is volatile city, but the technical picture, what's it going to be? Is it a default? Is it something like that that warrants? Well, I love how the talking heads always give a reason. Well, the reason the S&P went down today, or the reason it went up today, nobody ever talks about the technical picture. This chopping, overlapping, likely we're going lower low, and I'm going to hold to it. I've been saying it for weeks. We got the pullback, and I said all this chopping still likely going to do it. And even with the Nikkei as global liquidities proxy, this thing does not look like it's ready to go breaking out. Even this latest little move looks like a little three-wave type of move. And we're not breaking out above the 618786. In order for us to take that seriously, we got to get above 70,000 up here to start thinking, well, we're going up again. That's still several thousand more to go to get up there. And otherwise, we'll probably still need to go lower low. All right. All right. So again, I'm humbled and honored to be your mentor and instructor. Oh, I forgot to mention as well, we do have the software operating in NinjaTrader, and the trade management system is in there. I'm just placing this in my demo account right now, just to show you that this is expected to correct back down. So I don't think this thing's ready to go breaking out. I'm up, I'm down, I'm up, I'm down, I'm up, I'm down, I'm up, I'm down. I suspect based on that technical picture, we still need to go lower low. That's where my take profit's sitting. We're overbought, so I'm looking for this thing to start turning over in the coming days. But it is available, and you can use it. All the tools are here, whether you're looking at Bitcoin. And again, we have the drawing tools. What are my drawing tools? You go down here to drawing tools, you go to MPA Magic Fibbo and the Fibonacci. There's your Magic Fibbo there. But on these levels, you got your high, you got your low, and we look for extensions. We got them all in here for you, color coded. You can change them to whatever color you like. But there's the snare from the high to the low. In order to take this bounce seriously on Bitcoin, we got to get above this 100,000 range. Then it would set the tone, potentially going to some new highs. But again, you know what I just said? This is probably because the daily's turning. That's why we're getting this little bit. And what's going to happen? That's a weekly, excuse me, and we're going to slingshot lower. Go up, slingshot lower. Go up, slingshot lower. Go up, hint, hint, hint. We're going to rally toward the daily magic fibber around that 68 to 70,000 range. And then we're going to slingshot back down. I'm painting the Picasso on this software. Why would the weekly slingshot lower again? Lower, lower. One more time, the monthly. The monthly's not quite finished, my friends. It's still got a little something left to the downside, Mr. Tucson, just like we did in 2022. Calendar-wise, we're not there yet. We need to be in October would be ideal. That's where we topped. So this baby's turning down. It's still pushing down. So the weekly's turning up. That's why we're rallying toward that daily magic Fibbo. Then we're going to slingshot lower on the weekly as the monthly finishes the cycle. And I'd love to see October where this has finished the cycle, this has finished the cycle, and then we're down somewhere around that 50,000 and lower. 50 to 30,000 is the range. And my monthly's oversold. Then when it starts turning and turning, that was buying it below 20,000, boom. So we're going to do this next time. Monthly's going to be oversold, Harold. We get the weekly slingshot lower. We dip into the 50 to 30,000. This thing will be oversold. This is oversold. And then what? We PAI hook, trend momentum cross. And as we go into 2026, 27, 28, halving in 28, and 12 to 18 months post that, this thing should be off the chart up here where you can't see it at 200,000 and above. And what are we looking for? Monthly cycle up. Monthly cycle up. Got it? Monthly cycle up, monthly cycle up. Fair enough? We got the monthly cycle up going into 2020 for the next, that halving. Then we got the monthly cycle up going into 22 to 26, 25 into 25. And then we're going to get the next monthly cycle up going here from October of this year into fall of 2029. So we buy low, we sell high 3 years later. Buy low, sell high 3 years later. Buy low, what's the low? 50 to 30. And what's the software going to tell us? What's it going to tell us? This baby's going to be oversold. This is going to be oversold. It's already getting there. This part, we want money flow to come a little bit closer. Like last time, say the last two times, money flow got right there. So I would suspect over the next few months, this is just going to drift lower. That's going to go, and it's going to go a little lower. And then come October, when we're in the 50 to 30,000 range, we're going to buy that baby. And over the next 3 years, this monthly is going to cycle up. Monthly is going to cycle up, rinse and repeat, rinse and repeat, rinse and repeat. So again, we love and appreciate you. That's it. That's all. We'll see you tomorrow.